Call it the shock of September. After 21 years of running the show, Uday Kotak, MD and CEO of the Kotak Mahindra Bank, suddenly resigned from his post with effect from September 1st, 3 months prematurely from the end December deadline, saying it was A, for some personal and family commitments, and B, to significantly help the bank's bid to, and I quote, sequence the process with a transition and stability perspective. This was no less than an eye-popping event triggering speculation, conspiracy theories, and whatnot. On 21st October, the bank eventually announced the name of an external candidate as Mr. Kotak's successor. Ashok Vaswani, an industry veteran, but someone who has worked most of his professional life in international banks overseas. A spinner in his college days who, in his own words, left the country with just $14 in his pocket. This was homecoming at last. But to understand why this transition matters and the challenges that lie ahead for the newly anointed Mr. Vaswani, I have two of my colleagues who have known both the banker, Mr. Uday Kotak, and his bank for, I guess, close to 2 decades. So for all the perspectives, all the anecdotes, and much more, I have MC Govardhanarangan, aka Govi, ET's Banking and Markets Editor, and TMB regular and Maestro chronicler Sugata Ghosh, ET's Associate Editor, who believes if there is a story, it must be told. It's Thursday, 2nd of November from the Economic Times. I'm your host, Arijit Barman, and you're listening to the succession saga at the Kotak Mahindra Bank on the Morning Brief. Govi, Shugato, welcome to the Morning Brief. Always a pleasure to have you guys on the show. Shugato, let me start by asking this simple question. Leadership transition is supposed to be part of normal corporate life, be it a salt to software conglomerate like the Tatas or a bank like Kotak Mahindra. It should be routine. But the Kotak succession has become big news. It's almost like the HBO drama series Succession. Why is that? Why are we even having this conversation today?
Well, there is a background, a trajectory of events that has culminated in what is unfolding today. Uday Kotak built this bank and the financial services group with a team of loyal lieutenants who have been with him for years. Some of them have been around since the early days of Kotak Mahindra when it was a small finance company. So they have virtually grown with the organization. Understandably, given a choice, Mr. Kotak would have loved to hand over the reins of the bank, which is the flagship of his group, to one of them. And he would step back as a mentor. Now, if you just look back, there are shades of similarities with Infosys, where one of the members of the original team become the CEO. But then a bank is just not any other services. Here, the CEO and the executive director appointment has to be ratified by RBI, which has the last word on who can lead a bank.
Correct.
And clearly, the plan that Mr. Kotak had in mind did not play out the way he would have preferred. So he did perhaps what's the next best alternative. He roped in a veteran banker he has known for a long time. Was Mr. Vaswani the first choice? Probably not.
So an internal candidate was probably the first choice, you would assume?
I would tend to think so.
Okay. But you yourself said that the regulator, in this case the RBI, is always going to have the last word when it comes to handpicking a candidate. Then what's this fuss about?
Mr. Kotak did something which is unprecedented, and if I may say, out of RBI's syllabus. He stepped down as the CEO, but continued to be on the board of the bank. Now, he owns over 25%, more than a quarter of the bank's equity, and there is nothing in the rule book that can stop RBI from letting Mr. Kotak be a non-executive director. Because RBI has the last word when it comes to appointment of CEO and whole-time director.
True.
But here is a case which is unprecedented, where a founder steps down as the CEO but remains in the bank as a non-executive director. This is something RBI did not quite expect. And given RBI's frosty relation with Mr. Kotak, going back to the court tussle and everything, it is a widely shared perception that after this, or almost simultaneously, ranks within RBI, the regulator, they thought that if Mr. Kotak is there in the board, he would be doing the backseat driving. So we can't let any of his lieutenants be the CEO. So there should be an external person.
You talked about what was out of the syllabus. This whole frosty relationship of taking RBI to court also was, I guess, out of syllabus. But let me get Govi in. If we step back a bit, Govi, when Mr. Kotak decided to quit, did that take you by surprise?
In a way, yes. There is always a question that remains unanswered is that with just a few months to go, where is the need to resign from the position? And the personal commitment and son's marriage was also very well known. So to that extent, that the rumor mill creates sense, as to there is something going on behind the scenes that's not quite clear. So the sudden resignation really raised a lot of rumors, since there could be something more than what meets the eye.
And then secondly, mid-October, when Mr. Ashok Vaswani's name was announced, was that surprise number 2 for you?
Actually, Ashok's name cropped up about 6 months back. When they had entered, I think it was Egon's or somebody, when they were going around and making some inquiries. But one thing that really did not strike at that point of time was he hasn't really worked long in the Indian markets. He has been mostly outside of India, and he was above 60 as well. So those things did not add up. That was one of the reasons why I think the entire thing was going around between 2 internal candidates. And though Ashok's name was doing the rounds in some circles, so we also did not proceed with that in the sense.
Correct.
No kind of a probability of that happening. So, but it happened.
Yeah, because it was almost like a given that ye jo hona hai, to it would be either Manian or Shanti Ekambaram. It was almost like a given thing. And this was, to draw a cricketing analogy, googly for many. But tell me, you've profiled, or we've profiled Mr. Vaswani. You've been talking to people. What do we know of him? And why do you think Govi, the regulator, chose him in the first place?
In a way, if you look at the entire industry now, it's actually bitten by the technology bug. Everybody is talking about technology, as technology is the solution for everything.
Correct.
And even in Kotak Mahindra, if you look at it, there have been some lateral hires. I think someone from Amazon has come in. We all remember in the 90s, he went for a tie with Goldman Sachs. So I asked him, so if you were given a choice to go for a tie-up, who would you tie up with? His answer was Amazon or Google. So in a way, there's a lot of this obsession about technology that is going on. So when I put that in context and what Mr. Ashok Vaswani's strengths and what his contributions have been, it's been in the field of technology for Barclays. The post-2008, when a lot of this investment banking business was getting shaky and the deal making went down, so they all went to the drawing board to figure out how to make a kind of a solid business. So Vaswani was the earliest guy to really look at what technology could bring in. Vaswani was the first one in Europe to introduce something called Pingit, a payment system for Barclays in Europe. He has been a very, very early digital adopter that way, in the sense. If I remember right, he created a bunch of this digital eagles in Barclays. And whereas he created that ecosystem in Barclays, what he called the digital eagles, to really go out and go to the customers, reach and make them use technology and make it easier. So to that extent, the choice, I think, was more because what is going on in Uday Kotak's mind also about technology being the driver.
Even in his current stint in as the president of Gaia Technologies, it's a fintech company, a US-Israeli fintech company where AI plays a big role. And I guess when Kotak's son is also personally invested in this whole Kotak 811 initiative, I guess there will be a lot of things, a lot of synergies. Shugato, Mr. Vaswani comes in December. Now, as you said, Mr. Kotak's built an empire, an institution, and the senior management team has been very, very loyal to him. This has been an organization which has seen very few attrition at the top for almost 2 decades. A new CEO coming in who would perhaps want his own A team sooner than later. Do you foresee a spate of resignation and churn from the senior management in the next few months?
Well, I don't think so, at least nothing immediately. As long as Mr. Kotak is there on the board, he would act as an anchor and a kind of a glue to kind of hold everybody together. What you must also realize is the way Mr. Kotak's profile has grown in the last 2 decades.
True.
His influence as a banker, as a member of corporate India, his perceived proximity to the powers that be, and his very position in the financial services space, particularly with Mr. Deepak Parekh calling it a day. So this is the background against which this story is playing out. And also, Kotak has been extremely smart, the group, in navigating the regulatory terrain. Before the rift with RBI, the court tussle, where RBI felt that the Kotak as a group was pulling a fast one by issuing preference shares and calling it a dilution, that it would amount for a dilution of equity. But before that, till then, the way the group has dealt with the regulator has been quite admirable. It has stayed out of all controversies.
True.
It has not made any major violations. And in 2003, when the banking licenses were given, it was just given to banks.
Yeah.
It was given to Yes Bank and to Kotak, the NBFC, which transformed into the bank. It wasn't easy because that NBFC had a relation with large corporate, Mahindra. And we know RBI's aversion to corporate influence in banking and other things. So all that had to be navigated. The regulator had to be persuaded. So it went off rather smoothly. So when this thing is happening, the today's story takes a different color when you look at this background.
No doubt, Shugato, that, he is almost like a mythical figure in banking. But Govi, just from a market perception, how has the market seen this? The stock declined 2% immediately after the news came out on a weekend. It's been down 11% in the last 6 months. So is the market a little apprehensive, or it's fine with someone who's perhaps a little out of the box?
So there are 2 things in this. One is that the Indian analysts and investors do not know much about Mr. Vaswani. He is an unknown quantity as far as the Indian investors are concerned. They do not know what his agenda is, what is he going to do, what is the kind of a mandate that he has. So all these things are unknown. Mr. Vaswani has to come and lay out his plan as to what he intends to do, how he's going to run the business. All right. Because for 20 years, people knew what Mr. Uday Kotak is going to do. You could trust Mr. Uday Kotak not to take silly risks and blow up a big hole in the balance sheet. So that was the trust that people had. And it was more than a money-making machine. It was a great, very well managed risk. Now, for the first time, the institution is seeing a change of guard. If that is the case, people would just wait to see what is going to be the agenda and what is he going to lay out in the future. That will determine where it goes from here.
Shugato, it's literally a dog-eat-dog business, which is seeing unprecedented disruption from upstarts, from peers, as well as deep-pocket shadow banks. Would you have preferred a younger CEO? Or to you, age is just a number, and perhaps in banking, grey hair is what makes the difference? Vaswani is, after all, 63.
Well, I won't attach too much significance to age. As long as Mr. Kotak and the rest of the board has confidence in Mr. Vaswani, I think it shouldn't matter. On a lighter way, I would say that at the end of the day, Mr. Kotak has had the last laugh because he owns more than 25% of the bank's equity, even though the voting share is capped as per the Banking Regulation Act, and he owns it directly. And secondly, he now has a CEO he can trust. He has known very well. So I don't think he has reasons to complain, and he continues to be on the board.
Now, Govi, you rightly said that Indian investors and the equity market know very little of Mr. Vaswani. Indeed, he has very little operating experience here. Do you think that matters a lot? Because there could be a narrative around the fact that you need someone who has the aggression as well as deep knowledge of the unique dynamics, the practical issues, the regulatory landscape, basically understand the pulse of a complex and large market like India. The CEO's job, one may argue, is as much marketing as it is banking.
His handicap would be in the sense that Indian markets, Indian banking industry, especially in retail, it's far ahead of even some of the Western markets, right? So the developments in the retail banking and the payment system and the entire ecosystem here is far superior to some of the advanced economies. So to that extent, how we manage that is going to be a bigger issue.
Now, Shugatu, you yourself called Mr. Kotak the glue, the patriarch, the man who keeps the flock together. Now, we've seen in India that CEOs or promoters, especially, or the entrepreneurs, the founders, they find it really difficult to let go of. We've seen that in Infosys, an example you gave before. We've seen that play out very bitterly in Tata's. Being a non-executive, non-independent director, do you expect his shadow to loom large and therefore be a handicap for the new person to really be able to navigate the board? Or would you say that's actually an asset?
Well, as a director, Mr. Kotak certainly would have a presence, strong presence in the board. Whether that presence would be overwhelming is something we don't know. This person has not only built the bank, if you compare Mr. Kotak and Mr. Aditya Puri, where Mr. Puri focused on the bank, and Mr. Kotak grew other banking services, other financial services also, like asset management, insurance, the brokerage, alternative investment fund, along with his team. So he has always played is virtually the supremo. To imagine that he would totally step back now, I think is unrealistic. I don't think even the board would be happy with it. But over a period of time, I see that happening. I think the question you're trying to ask whether there would be differences, but that is too early to say. After all,
too early to say.
Mr. Vaswani is not somebody who has been imposed externally by someone else. I mean,
correct.
It's very much with the choice of Mr. Kotak. So there is some matching of wavelength. There is some understanding. Mr. Vaswani knows what is expected of him, and Kotak knows what he can deliver. So
correct.
I can't imagine an immediate flashpoint.
That brings me to the next question. The cult of Uday Kotak. He talks, it becomes front page headlines. He tweets, it becomes a national debate. He litigates, eyes pop out. Shugatu, what would you attribute this to?
I think Mr. Kotak has an unique ability to read the tea leaves. His judgment about the circumstances, the regulatory regime, the environment, whether it is regulatory environment, whether it is political environment, whether it is business environment, is good. And I think that has helped him so far.
But Govi, these are tough shoes, therefore, to fill. For 3 years, the Kotak stock has not gone anywhere. It now trades around 2.3 times 1 year forward price to book versus earlier when it was around 3 times price to book 1 year forward. So what, according to you, should be the agenda number one for the new CEO?
So one is that, unlike in many other succession or managerial changes, things are mostly broken and somebody has to come and fix it up. Here, there isn't really anything for Mr. Wasman to fix. And the bank is in a good shape. And so there are no or expected some kind of nasty surprises or anything of that sort. So Vaswani gets into an institution which is clean and perfect. But that itself could be a kind of part of the problem. In the sense, where do you improve and grow and improve your efficiency? And Mr. Uday Kotak has built a great institution, multiple businesses together. But in the sense, when it came to real commercial banking, he has not built that scale. He was extremely cautious. He was not going after growth. He was not willing to bet big money on big advances, some kind of growth in industries. He was extremely careful. That was one reason why the market always rewarded Kotak Bank with a kind of a higher multiple than the average. So that was the time when everybody else was going berserk and in terms of imprudent decisions and all. Now, the field is a bit of a level in the sense that most of the banking industry, all the competitors have all cleaned up the mess. So there are lots of people who are really good or getting better than what they were. So to that extent, the investing community has a lot more options than just a Kotak Mahindra or an HDFC Bank. That is one of the reasons why the price to book ratios for both HDFC Bank and Kotak are coming out, whereas even a PSU Bank or a State Bank and everybody is really going up. So to that extent, yes, he has to show the path to grow the banking business. And that is coming at a stage where the entire industry is really fighting for the most important raw material, that is the deposits. It's a kind of a scramble there in the market. So how Mr. Vaswani is going to build that liabilities file and how he's going to raise the bar when it comes to corporate lending as well. So these two things are going to be most watched.
Absolutely. As you rightly said, post-COVID, after many of the peers cleaning up their balance sheet, the relative premium for a clean, risk-averse balance sheet has gone down. So therefore, many would argue the priority number one should be to maintain and accelerate liability growth. Original strategy of high 6% rate on savings deposit is not helping much either because other banks are also catching up. So that is priority number one for him, many analysts would argue.
Yeah, the liability growth. There have been talks about Kotak Bank being interested in IDBA Bank. So whenever it was getting privatized. So if there is, it's a kind of all said and done, the IDBA Bank is really attractive when it comes to the deposit franchise.
Correct.
For Kotak Mahindra Bank, that may be the most important. Whether Mr. Vaswani, how he pursues that, whether he pursues at all, because the valuations really do not merit a bid at this point of time for the IDBA Bank as well. Especially when you look at what Mr. Uday Kotak historically had done. He has been quite stingy when it came to paying for the takeovers, whether it's ING or he let some of them slip by. So how they are going to build the deposit franchise is a question, and whether there is going to be another takeover, whether they're going to throw a bid for IDBA Bank. So that is if the government decides to sell and goes ahead. So these are the questions that will be watched.
But you also had touched upon a very important point earlier, which is the digital part. Now, going through the last annual report, what struck me the most was Kotak's plans to leapfrog to what he calls digital. Digital first, backed by technology. Now, in India, how easy will it be for an outsider to actually do that on the ground? Or it will actually work in his favor and, because of his global experience?
See, in terms of these models, a lot of things are being still tried out. One is that the asset side, the other one is the liability side. When it comes to building an asset side, that is when you are going to give out loans. These digital things are the most easiest and you will be able to execute. But to build a liability side, that means the deposits. How much are deposits able to get through the digital channels? That remains a question. Do not know how much of data or studies are being as to how successful a bank or somebody has been in building the liabilities franchise through the digital end. So it is still in a trial phase with this country case. So everybody is trying to do a lot of models, test out various ways on how to do that. Many years ago, just soon after converting into a bank, I was having a chat with somebody at Kotak and said that we realized that it's very easy to give someone a 2 lakh rupee loan, but to make that flow deposit to 20,000 rupees in the bank is a very difficult thing. So, wildcard, we have no idea about how that's going to play out.
Shugato, I want to quickly ask you something that you mentioned before. Aditya Puri built a phenomenal bank brand. Uday Kotak built a financial ecosystem, a string of subsidiaries, and since it didn't create a holdco structure, there was no value leakage. But dispassionately, if you look back at their rate of performances, won't you say that very few have been segment leaders? Granted, some of these businesses like investment banking are cyclical. But won't you say, or won't you agree that he was late to enter general insurance? He failed to scale up life insurance. The Godzilla that the bank is, it still contributes 73% of the total profitability. All the arms put together are still at 30 odd percent.
Yes, of course. I mean, in those spaces, the competition was tremendous. For instance, when KV Kamath changed the rules of retail banking, Zerodha
Correct.
changed the rules of brokerage.
True.
In asset management, we have seen large banks. For instance, Kotak doesn't have too many branches. It doesn't have that kind of sales force. If you have to
Correct.
compete with a bank like HDFC or ICICI, you are at a certain disadvantage. But I would agree with you on scaling up the life insurance. Possibly it could have been on the insurance businesses you could have done. But then there is a risk there because insurance is typically a cash guzzling business, and there are regulatory imperatives also when a bank is backing an insurance company.
Correct.
So it's difficult to compare between Mr. Puri and Mr. Kotak because the roles were very different. And Mr. Puri had the advantage as a early mover. He had an advantage of selecting corporate loans very carefully, build a almost zero NPA book, and he could focus entirely on the bank, in growing the bank, backed by a strong brand called HDFC.
Correct.
Kotak had a brand, but it was a comparatively late starter. Well, the bank valuation, it could have been much better. There is a bit of disappointment there, as you pointed out.
Correct.
But, I don't think as a group it has done so bad.
Now, before I let both of you go, I want to end on a personal note. Govi, what's your favorite Uday Kotak anecdote? What's that one memory or one story or one episode that will forever be etched in your mind?
So there was a time when JM and DSP, Kotak, all of them had joint ventures with one with Morgan Stanley, other one was Merrill, and Kotak had with Goldman Sachs. So Kotak was one company that did not have Goldman Sachs, a name in the company's.
Yeah.
So it didn't have, so JM was JM Morgan Stanley and DSP Merrill Lynch. That time I was like, why, for instance? And he was just so passionate about the Kotak surname and that, no, I just want to keep it, it's mine. So my family name. So that's, yeah. So that was one thing that is there in my mind.
Some famous quip in Gujarati that he shared?
No, nothing in Gujarati, but not related to banking. It was, I remember, this was almost 15, 20 years ago. After an interview, we were just chatting. And I asked him that in the course of conversation, that why don't you invest more in Business Standard? You own the paper. Why don't you grow it and into a force to reckon with in circulation and other things? So he just looked at me and smiled. And he said that, Dekho, there are only two Seths. Do hi Seth hai. In industry, it is Reliance. In media, it is Times of India.
Despite the consistent low return on equity for years, Kotak Mahindra Bank reaped a premium compared to several state-owned and even private peers like ICICI Bank just by being conservative on growth and having a pristine balance sheet. There was no risk of bad loans or leadership, no value leakage from the subsidiaries. But post-COVID, the Indian banking landscape has undergone radical shifts. Most banks have gone through massive balance sheet cleanups, thereby reducing the relative premium attached to Kotak that thrived on its spotless loan book. No wonder, for around 3 years, the Kotak stock has gone nowhere. For the incoming CEO, I would argue he should prioritize accelerating the liability side growth. The original strategy of high 6% rate on savings deposits is not helping much either, as other banks are also playing catch-up, having cleaned up their books. The commercial and wholesale bank too needs a booster shot. Kotak's leapfrog into a digital-first strategy also needs to play out in the real world, as would Vaswani's lack of operating experience of steering a large ship in India. Finally, Kotak has been shedding its conservatism and rapidly scaling unsecured loans in its product mix that now stands at 11% of the total loan book. This higher share can be a double-edged sword in a downturn. So that's it for today. This is Arijit Burman from the Economic Times, and you are listening to the succession saga at the Kotak Mahindra Bank only on the Morning Brief. A special thanks to our guests Govi and Shugato for sharing their amazing insights, anecdotes, and perspectives. This episode was brought to you by sound designer Rajas Nayak and Indranil Bhattacharjee. Producers Anupriya Nair and Vinay Joshi. Executive producers Anirban Chaudhary, Anupriya Nair, and yours truly. All new episodes of the Morning Brief podcast drops every Tuesday, Thursdays, and Friday. Don't miss it. It streams on Amazon Prime Music, JioSaavn, Spotify, Apple, and Google Podcasts, and of course, ET's own audio platform, ET Play. Thank you for listening, and if you like this episode, do spread the word. Goodbye and good luck.